Oh, what's going on, lads? So, people would like a video about the defining range, and I'm extremely busy these days. I don't even have time to trade for myself at the moment. We're setting everything up, but we have. Let's wait for this to show up. Let me just 1 second. So, add the indicator to everything. Has it been added twice to Dixie though? I believe it was. So, the defining range inside of its name holds a lot of truth, right? When we originally were given the defining range as the first concept, it unlocked how daye reverse engineered ICT, which is he took the daily setup and was able to accurately extrapolate it out fractally to all the time frames, right? Which is the magnificence of what he has given me as a trader, right? As someone who understands ICT from the 2016 mentorship, that was a pivotal shift in my understanding of ICT, right? Just my trade from Thursday, nothing of real importance. So we will go to say the H1. We will do actually let's do the H4. Oh, I don't have it set up, and apologies for the crow. Let me go kill that motherfucker. Okay, so I just fixed up the indicator and stuff like that to have the settings that I want to show for this. So I'm just looking at the FX triad. Do I have this sequential SMT set up properly? Yep, cool. So what is the importance of the defining range? What is so good about the defining range? Why is it, right, that Medic had revealed what the code for the zoo was? Right. Why call it the defining range? Yeah. What is it? What is it based off? It is the extrapolation of the Asian range logic, right? So if you understand what the Asian range is, which is the consolidation before London, and if London sweeps that consolidation on one side of it, you can potentially have a trade to the other side of it. So as someone who has traded London their entire trading career due to the fact I'm geolocated in Australia, the defining range and the ability to extrapolate the logic out to different time frames was immensely powerful for me. Right? Now, already knew about it in the sense of the Monday range trade, right? And what happens in Monday? What's Monday? It's Q1. And so Monday has a defining range as well. And then the first full week of the month has a defining range. The first full quarter of the year has a defining range, right? 2023 was a consolidation, right? Which is a defining range, right? Once you understand that you can trade all of these things the exact same way that you can trade the M5 on the Asian range or the M1, it upgrades your game to immense levels because you can now truly use your single model that had never changed, right? And it's to this day the same model that I trade, right? It's just Asia high, Asia low, right? So that is why the defining range is so important to me. Now, you can run through a chart without this indicator on, and you should, in my opinion, manually go and find all the defining ranges. And I will just show you my manual version of all of this. I think the weekly is where I've done most of the work. So as you can see here, this is the weekly profile marked up on Euro with the sequential SMTs, the projections, the defining range, and all that type of stuff. I did this months ago, and it was extremely beneficial to my understanding of the defining range. All right. And so I believe this is where you start it. To do this, by the way, takes about, I don't know, a couple of hours, you know, to actually check all the sequential SMTs and making sure everything's right and getting everything drawn at every time frame. And because this is done for the monthly cycle, the yearly cycle, the quad cycle, and everything, right? It takes a lot of time. But if you do this manually, right, you'll start to see a very noticeable trend with the sequential SMTs in relation to the defining range, right? And it's the reading of price as a story, right, as we continue on, that you start to understand how important the defining range is. It helps you literally define where you are and what you're doing. It gives you premium and discount. It gives you the factor, you're inside of a consolidation, are you inside of an expansion, right? Is what you are witnessing the creation of a fair value gap? Is what you are witnessing the smart money reversal? Is what you're witnessing is the first leg of distribution, or the second leg of distribution, you know, or reaching the terminus? All of this can be worked out by looking at the defining range in comparison to what price action is doing, and where the concepts that we have been taught start stacking upon each other, and it gives you a more holistic view on price. And this is just viewing it on a single asset, just viewing it with projections and the same time frame sequential SMT. This is not taking into consideration looking at two-stage or intermarket or any of that stuff. Just month one. True open, defining range, sequential SMT. I believe we got hidden in the first month. It might have came in the second month, but for the most part, you know, this is extremely early basic day. So going back to, was it 6C? 6B. And applying the indicator again. You can then just now do that extremely easy without having to spend hundreds of hours actually doing the drawing. Right, I might just tone this down a bit. I don't really care to see it at the moment. Actually, let's just get rid of true opens because I don't want to deal with that at the moment at all. I just want to see the defining range, and that's it. That's the beauty of this indicator. It's boom, boom. Actually, I might turn on I don't like not having true opens on. But it should just show the true weak ones at the moment. Yeah, cool. So this is what you should be doing with this indicator, right? Like the true worth of this indicator is backtesting, and it should be saving you hundreds upon hundreds of hours. Hopefully my visibility settings are correct. Yep, 1 hour, cool. So defining ranges are, like I said, set in stone. While there is a Q2 defining range, it's not of great significance to me. So that might answer a question that some people have. I don't look at it, I don't use it. I understand when to use it, why you would want to use it. I just don't use it as of yet. It is like many things, there are concepts that I don't use yet. Either I don't understand them fully, or I just haven't found a way to incorporate it into what I care about. We all have our different route in trading. Even my friends and my colleagues that I trade with do not trade the exact same way, which is a good thing, because trading is a very, very personal endeavor. As I've been saying of late, my trading style has to adapt to my new lifestyle. But the reason that I'm extending it out like this and not just relying on the indicator is because the indicator doesn't extend it out as of yet. It's just a quality of life issue. It's not of higher importance than sequential SMT. So this is just a portion of what I used to do. Now I had another indicator that helped me do this as well at this speed for the defining range. But I still do suggest that everyone everyone does this the old way of grabbing the GAN box, doing this. Oh, look at that. I should be always using the 2 a.m. on the Monday for the start of my defining range. And then this is the end of it, right? And you just repeat that over and over and over again for different assets and stuff, and it all just slowly sinks in, and you will find interesting things. Like the difference between CFD and futures being out of sync due to futures closing. CFDs either don't close or close for a very short amount of time and open at a different time to futures. So these are things that happen when you actually backtest properly, which you should be doing while exploring this defining range. Rude admins always say backtest because, oh, backtesting might actually teach you something. And if backtesting doesn't teach you anything, that should scare you. Legitimately. It means you have nothing interesting to ask the charts. And if you have nothing interesting to ask the charts, then are you truly interested in becoming a trader? So, in front of you, there is a bunch of different defining ranges. Can anyone tell me what this defining range is really telling you? All right. How it's almost a direct replica on almost every single day up until this point. Then it rolls over and slowly grinds down until it does its smart money reversal outside of the defining range, to then go into expansive candle. Expansive candle. Into smart money reversal above defining range. Down into what is essentially a consolidation week. Why can you say that? Sure, price is trending. Yeah, cool. Goes down below defining range, goes up. Down below defining range, goes up. Down below the defining range, goes up. Above the defining range, goes down. Right? Comes up and is inside of the defining range while trending down. This is just distribution, right? This here is a consolidation for the entire week until we go into the Joker. Right? Oh, well, sorry, this is a Joker week, but like this is the Joker part because this is the start of the new month, but it's inside of an old month's weekly candle. Right? And they tend to do interesting things during this time. If you have sequential SMT at the lows and it's bearish sequential SMT, right? And there is no divergence between where the defining ranges are being tapped, there might be an issue. But if this is creating sequential SMT down here at like the 25% of the defining range, while another asset is hitting the 50, while another asset is hitting the high, then there's divergence within inside the defining range, which generally represents like a sequential SMT at some point, just due to how the defining range will encompass Tuesday here, for example, Wednesday here, right? So this here being bearish, this here being bearish, there might be issues if one of these are not being swept on the other assets, and they might not work. So we'll just quickly take a look because I don't know what happens on this week. So we'll place the defining range here. And the defining range here. And oh, this was that week. This was that really funky week where Dixie kept doing these massive 1 minute candles up. And people were considering them bearish. And then they got fucking jacked. So yeah, I would just scrap thinking about this entire week in relation to the defining range, even though I'm correct in what I was thinking, due to the fact that this is literally just a 1 minute candle. I ignored it completely. And when people considered it important, I didn't understand it. Yeah, because it just looked like a data error. And then price went up. Right, so yeah, this bearish stuff kind of makes sense why you would want to ignore it. But even though it is indeed proving my point, the data is just corrupt, so I don't want to use this as an example anymore. Okay. Here, so we'll start looking at the divergence between the triad. So when I really started falling in love, because I didn't use the defining range all the time, I knew about it, I understood it, I took the trading concept that I use, which is Asia high and low, right, and I was using the defining range. I just wasn't placing it on my chart at all times until I did that backtesting session. Or sorry, not really backtesting session, more I wanted a historical chart that I could interact with that had all the concepts applied to it, where I could overlay it and pull things off and all that type of stuff, make it extremely customizable. Hence why the indicator was created by MCUP, because it now does the job for me, which is what you're seeing right here. When I say hundreds of hours saved, it's untold how many hours it saves. It's worth hundreds of dollars to me. Hundreds, thousands of dollars to me, right? It is amazing. It has saved me so much goddamn time. Just that alone. Free for all you guys, by the way. So you'll see here that we have divergence inside of the defining range. Like, this is a good example of it, because even without the indicator or anything like that, you can see some type of sequential SMT, right? And that comes in the form of this low right here. All right. It's New York. Yeah. This here, actually. So there's something going on between Mondays and all that, but whatever. It's more the inside of Tuesday. We have the divergence, right? And then over here on Thursday, it comes back and we have divergence yet again, right? Now this is a CRT trade right here. And all this is Wednesday high, Wednesday low, daily fair value gap situated right here, because this is Monday's high and this is Wednesday's low. This is a daily fair value gap right there. And you can tell all that once you truly understand what it is that you're looking at. Because this defining range is just Monday. It's just Monday. And Tuesday was an expansion candle. And Wednesday was a consolidation inside candle. And Thursday is a tap of the fucking fair value gap during news, which is also a tap of the defining range high on Dixie. Oh, sorry, the defining range low on Dixie, because my Dixie is inverted. Let me just reinvert it. See? The defining range allowed me to see the 50%, which is the bane of my trading career. This is where I generally will get stopped out, because I am not paying attention to the 50%. And when Daye said that the defining range, lows, highs, and 50% are sometimes sensitive, right? And then you bring in the true opens, never returns to the true weekly open, goes below it while creating that sequential SMT, valid long, goes below it on Dixie on Thursday, valid long, valid long. Why did I trade this, guys? Because of all the information provided to me by this defining range, it said that this was shaping up to be a great trade. Okay. All based around the defining range, defining my weekly profile. All you have to do to discover everything that I know about the defining range and what I think about it is simply to look at them non-stop, holistically, while caring about all the concepts together, and you will see how price reacts to it. Like, what do you think this week is right here? on Dixie. There is the weekly high, defining range high, defining range low. What's his price doing? It is consolidating. Right? That is a consolidation. Why? Because it never leaves the defining range. Right? What is this? A retracement / reaccumulation. What is this? An expansion out of this retracement. What is this? Possibly a smart money reversal above a defining range, a high. Yeah, it sweeps that high. There's a total sweep there. All right. What is this? Well, at the moment, it's looking like it wants to go back up. It might take that again. Maybe. We'll see. Euro, and that's looking a lot different. And then you can go out to, say, like a monthly chart, but let's do like, yeah, here. This is the single most cleanest thing that you'll probably see on this time frame. And you should truly, truly care about this. Truly care about this. Like this one, like, tell me why you wouldn't consider defining ranges extremely important to our trading style. If that is the most utterly perfect signal for our trading style, and you could see this in month 1, by the way, guys. As soon as we got the defining range, this is one of the first things that I stumbled across. I was just like, holy shit. Holy shit, what is this? Right. It is insane what this stuff can do. This is a consolidation. What does this tell you? It says to trade the range, right? You long to range high, you short to range low. What is this one telling you? Expansion, you know, doesn't want to break down, but it goes eventually. Another turtle soup, death. There would have been signs in here of that coming collapse, right? Just like we see signs in here of a movement. Now, in my opinion, it's a collapse because we actually have this right now. Like, do you see the difference? Do you see the divergence? Do you see why I am extremely bullish on Dixie? Because we have hidden and regular sequential SMT on the quadrennial cycle at the moment. Guys, do you see what happens after you get one of these things? On here. This one gets blown out. This one gets blown out. This one works. This one works. This one works. This one gets blown out. This one works for a while. No, actually, it stays good. This one works for a little while. This one works. This one works. This one might have got you blown out depending on when you put the stop loss. But you could have got on board with here and it would have worked out. So do you see the importance of the defining range? All right. You can see without even having the indicator, you can just see that it's taken that high. And you know that Monday range model is in play. Asian range model is in play. That's all I've been trading. 50% to the high to the low. That's it, guys. That's all we're going to be doing, in my opinion. Right. Fair value gap, COVID, all that good stuff. So I hope that helps you understand why I use the defining range, why I have it on my chart at all times, right? And why this indicator is so goddamn good. Thanks for coming to my TED Talk. Hope you all appreciated it.